FHA Mortgages. I get asked a lot of questions from clients and friends and business associates. What are they all about? What is the purpose? Who are they intended for? What are the rules? What are the parameters? If I have a listing and someone brings us an FHA mortgage offer, what does that mean to my seller? We're going to cover this and a lot more in the next few minutes. My name is Mike Renick. Welcome to the October 23rd edition of the Mortgage Insider. I am the senior broker and the team lead with Team Renick Real Estate Services. We're part of that great Keller Williams and the Water family, serving the west coast of Florida, based out of Sarasota and Bradenton. My guest today is Christopher Kiblin. He is the Vice President of Mortgage Lending. He brings over 20 years experience in the finance mortgage industry. He has fine-tuned his customer service skills, and quite frankly, that's why I like to partner with Chris. He gets it. He understands customer service is where it's all about. He has a guaranteed rates promise that he makes to each of his clients to give them a low rate and the right mortgage product, along with the transparent and fair fees. He leverages cutting-edge technology to streamline the process and simplify every step. And because of that, he can provide the unmatched service, and he makes a great marriage partner in terms of business with Team Renick. So let's bring him on. Good morning, Chris. How are you today?
Good morning, Mike. How are you today?
Doing outstanding. I don't want to jinx us. We've had some software glitches, as I shared, and right now everything is going strong. So I feel really good, and that means we can focus on this great message that we have. So you're going to talk about FHA mortgages.
Correct. Yeah, so in our area, we're probably somewhere around 40% of all the stuff that, home selling from buying, about 40% of it is FHA in our market area. So, it's a good topic to talk about because not a lot of people understand what FHA mortgages are. So I thought it would be a great topic for us to go over. So what I'm going to do is I'm just going to go over some of the key features and benefits of it. So one of the things about FHA is, hey, we've all had some kind of issues in the past. Something happened where, hey, my credit score is not that great, or I had an event in my past that wasn't, that triggers something, hey, whether it's a foreclosure or a short sale. So what FHA has come, with their program, it's a little bit more lenient than the conventional. So like for credit score, we can go all the way down to a 580 credit score. So that really helps the client, whereas conventional, it's more of a 620 type of, so you can have a lower credit score. The minimum down payment is 3.5% down. So, you can get away with just putting just a little bit down. The other thing is that, one of the things that we run into a lot of times, FHA mortgages are also first-time home buyers. So they don't have a lot of money to put down. So what we can do is we can actually ask the seller to help pay for some of those closing costs. And with that, you can actually ask the seller to contribute 6% of whatever the purchase price is. So, that could be a huge difference. So what it does is they will cover all their closing costs. And then the only thing that customer is bringing is their 3.5% down. So there's ways to make the deal work if you only have the 3.5%. Okay. We also offer, so one of the nice things is also FHA offers is what's called a 203K renovation loan. So if you found a house, let's say you found that beautiful home that you just love, but it needs some work, then we can do what's called a renovation loan with an FHA mortgage. So there's some options there that we can do, okay? Another option is, so the big thing is, let's say that, you're looking at a house and it will allow you to have what we call a higher debt to income ratio. You're allowed to go all the way up to 56.99% debt to income ratio on what we call the back end. So basically that's all of your liabilities, including your new housing payment. So it's a less, it's a lot more aggressive and allows you to buy a house if you don't have that income that you need to qualify for conventional. So it's also one of the big things that we want to talk about is the shorter waiting period. Okay. So a lot of times, like I said before, is let's say you had a foreclosure, you had a short sale, something happened in your past, whether it's a bankruptcy. As in conventional, you don't have to wait as long. So like on a foreclosure or short sale, you only have to wait 3 years since there's a waiting period. And on a bankruptcy, that can be as little as 2 years, depending upon what type of bankruptcy it is. So these are just some of the things that FHA allows you to do. So it's a great program.
Hey, Chris, I had heard the inspection program, or we're getting a little feedback. The inspection process is more stringent with FHA. Is that true?
So one of the things is that, with FHA, they are going to want you to have, like, as far as the house being appraised. So not so much on the inspection part, but when we send out the appraiser, so they're going to send out the appraiser, and let's say they see some kind of, mold, or if they see some kind of termite damage or dry rot or something like that, they are going to be a little tougher on it because it is FHA. So if they see termite damage, that's going to need to be fixed, and it's also going to need to be treated. Okay, same thing with, like, if there's dry rot in wood or anything like that. The roof, it can also be an issue. So sometimes, depending on the age of the roof, it depends on how much maybe it needs to be replaced. So one of the things with FHA is because of such a low down payment that they're asking for, and because of the type of house that they're trying to do, they want the house basically to be pretty move-in ready for you. So that way you're not coming out of pocket with a lot of money. I mean, like I said, most of these guys are only putting down 3.5%. So what it does is if they don't have the money to fix the house, that's why they want the house to be ready.
So the FHA, we're getting the feedback again. Sorry about that. It's really the way I understand it, it's a federally backed insurance program. Is that true? Can you explain a little bit more about that?
Yes. So basically, that's why they'll allow a little bit more risk into these loans. So what they do is it's a federally backed program. So if anything should ever happen, the lender is covered by this program. So one of the things about FHA, though, here's a little bit of a difference. So FHA has what's called mortgage insurance. You have what's called an upfront mortgage insurance premium that is rolled into the loan. Plus, you have a monthly mortgage insurance premium that you got to pay. If you only do the 3.5% down, you got to pay that for the life of the loan, unless you pay it off early or you refinance it into a conventional mortgage. So there is ways to get rid of the mortgage insurance, but if you only do 3.5% down, it is going to be through the life. So that's what that insurance is. You're basically paying for insurance, saying that you're going, just in case something ever happens, then you're covered, and FHA will then reimburse the lender for that difference or whatever you still owe on that house.
Excellent. So it's really a win-win all the way around, correct?
Correct. I mean, it really gets you in the house. I mean, that's the thing is, like, a lot of people still don't, a lot of stuff happened in 2008, and things happened, and where they lost, their home or whatever. And so it gives them another option to buy a house. Because, like a lot of times in 2008, some people, they tried to stay with it and they just couldn't. And then by the time that they actually foreclosed on their house, it might not have been until like 2013, 2014. So, that 3-year period makes a big difference. So, what happens is it allows you to get back into home ownership without having to wait the 7 years like you do in conventional.
Okay. Chris, if someone wanted to learn more, what's your phone number?
My phone number is 443-668-5727. Yeah, there's a lot more that goes into these loans. So, if you have more questions, call me anytime.
Chris, another outstanding job. And we've been together, 3 or 4 weeks, and you're a pro now. I really enjoy your professional approach. Your knowledge of these programs is second to none. You combine that with your customer service, and it's a home run all the way across the board. So my personal thanks for joining with us. Thank you.
Thank you. Have a great day.
You too, Chris. We'll see you next week, and we're going to talk about conventional loans.
That's correct. We're going to go in the other direction next week.
All right. Take care. Thank you for everything.
All right. Bye-bye.